or this one here,
Yeah. You
and
see
then
that spike?
that spike,
Yeah, to that
and,
one
and
above it.
then it went to this one.
Aye. Aye. So close, so close.
Yeah. So the two ways you can like do this, right?
Mm-hmm.
The first way is you 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 use multi-time frame, right?
Okay.
The second way is to just use one time frame and just follow uh the order flow.
Okay.
Now the order flow can be a little bit of hectic, but I kind of like it because it gives you a lot of opportunity compared to when you're using multi-time frames, right? Multi-time frames also can it's also good, but you can miss some of the little things here and there, right? I'll show the difference.
Mm.
So multi-time frames, this is when you are looking at multiple time frames, right? So for example, you go in 1 year and you see that the market is doing something like this, right? So that means you know that we're in a downtrend, right?
Mm.
Because it's creating lower lows, right? So if you are looking at things on the 1 year, the thing you're going to do is you would want to draw your point of interest so that when price mitigates this point of interest, right? Then then you go on a lower time frame or 15 minutes or 5 minutes to look for a change of character, and then so that you can trade from this order block, right? So when you go on a 15 minutes, or let me just say, or when you go on your 5 minutes, you'd want to see the 5 minutes behave something like this. After this is after your 1 hour has mitigated your point of interest, or
Mm.
your order block, or your 1 hour order block, still the same thing. So now when you go on 5 minutes, you want to see 5 minutes uh do something like that, and then do that, right? So when it does this, that means it's showing you uh signs that it's going to reverse, because here it has given you that change of character.
Mm.
It has given you that change of character because it has broken the that low on 5 minutes, right? To show that okay, price is rejecting this 1 hour order block when it does this on 5 minutes. So the green one presents 1 hour movement. Now the red one presents the 5 minutes time frame, right? That's so we don't
Mm.
confuse ourselves. When it does this on 5 minutes, that's when you draw another order block on 5 minutes, and preferably the extreme one, right? So you want to draw the supply that broke this low here,
Mm.
or that caused this change of character. And then from there, that is when you want to leave your sell
Limit.
limits, right? So there are two ways here. You can put your order block there, I mean your stop loss there, or you can do that, right? It depends which lot sizes are using, how big your account is, all those come to play. But if just a small account, you can just strict yourself to just that order block on 5 minutes, right? Like for
Mm.
me, I like doing it like that, but I've seen other videos, they like covering the whole order block, even the
So,
one on 1 year, right? That means
mm,
if price goes beyond this point here, that means
single.
that means this movement is no longer valid. It's no longer going down. Prices will continue going up. So this is why they put their stop losses there. So as for me, I just like putting a stop loss just on the 5 minutes order block or 15 minutes order block like that. Then you go with the price and then you do it like that, right?
Mm.
Yeah. So this is where you like let me just show an example just here on NAS, like something like this. Say let me yeah, my chat is dirty. I need to clean it.
Yo, you've been busy. Absolutely, you've been busy.
Yeah, you need to mark. You need to mark each and every point so you shouldn't forget.
I'm telling you, our own my chat also looks like that.
So overall, say when we go on 1 hour, right?
Mm-hmm.
We are still in a downtrend because if let me just try to clean these ones here. Let me do this. Just leave that one there. So on 1 hour, we are still in a downtrend. Here's why. So at this point, okay, let me just start from here, right? So as price was going down, making those lows, right? Then here it made that change of character. Here it made that change of character. Because guys, I'm presuming you already know well how to mark your higher highs, higher lows, high, right?
Yeah.
Yeah.
Yeah. So here it made that change of character because this was our recent high in this downtrend. This was our recent high that caused this break of structure to the downward, right?
Mhm.
So when we got that, that means there was an indication that now an uptrend is starting, right? But then again,
Mm.
when it was when price now expected price was going to come here and maybe we draw some order blocks down here or there or somewhere in this area, right? But now look at what price did. It did not respect these order blocks. It's changed again to break this low here because this was our lowest point to indicate that price was going to continue down, right?
Mm.
Because our demand failed to hold. So again here, we have this break of structure to indicate that price will continue going down. Here it says it was continuing to go up. Price came down here. Our demand in these areas failed to hold. That's why price did that, right? So when it broke here, right? When it broke here, the highest point from where price came from is that one, right? So
Mm-hmm.
that is our highest point. That is our highest point. This is on 1 hour, right? So we know that that is our swing. That's our swing high. So now we know that as long as price, even if it's going, even if the 1 hour is going, it looks like as if it's an uptrend, the overall movement is to a downtrend until this swing high is broken, because that's the highest
Okay.
point price went before it came to break this structure here, right? So now we know that whatever is happening in here, it is just internal structure. It is just internal structure. Even if we see the change of characters in this internal structure, we're just going to trade those ones according to the internal structure. Otherwise, the whole movement is still a downtrend. So, so we look at areas, because when you do this, you like can even use your equilibrium to just do that, because this is the lowest point it came before this mini uptrend. So if you can draw your Fibonacci like that, so we know that, okay, when price starts going up like that, we want to take order blocks that are above here, the 50%, this 50% here. Any order blocks that are up here, that's where we want to start selling it or looking for those sales, right? So we have areas like this mini supply there, and then we have areas like that one acting as our extreme. But now we also have areas like that one there. We also have areas like our last one is that one. So even this one, even that one. So those are the point of interest. You are supposed to now check what price or how price would react in these areas, right? So if you look at what happened now on Friday, if you look at what happened on Friday,
Phil,
when we look at,
you didn't Lykson?
yes,
You didn't clean the charts, ne?
no,
Okay.
yeah, you can't see anything.
I can see all those things that you've been busy with.
Okay, I'll clean some of the things. Okay, so now this is the area where price reacted, right? So let me just delete that, and then I mark that one as our order block on 1 hour, right? So let me just delete these things. I already draw them. I hope I remember. Okay. Let me just. So this one I think was on 15 minutes or some reasons, or 5 minutes anyway. Let me just delete this one. Let me just delete that one also. Let me use the one for 1 year, all right? So, and then I can delete this thing also. Yeah. So this is our 1 hour order block. And after price mitigated there, like I was saying in this example, where is that example? Now I have a lot of things. I think I even rubbed off some of the things I was showing you guys. Anyway, like I was saying in that illustration, whereby where price is in a downtrend and then price goes to meet the order block on 1 hour, right? Let me take back to this to green. where price goes to mitigate your order block on 1 hour, like this is this, right? That's our 1 hour order block. Price has gone to mitigate. That's the mitigation there, right?
Mm.
You see, there are times when you can just risk and just leave a sell limit there, but that's the risky way of doing things, because sometimes this won't hold and then it just goes direct, right? You can lose a lot. But we just want to enter when we have that confirmation, right? When we have that confirmation, at least you may be late on the entry, but you are going to go with a safer entry. So after you have this mitigation, now you go on 5 minutes. On 5 minutes, you want to see something like this. So on 5 minutes, you want to see something like that, right? So when you see something like that, where you have a change of character on 5 minutes. Can you guys see?
Mm-hmm.
And then when you have a change of character on 5 minutes, then you draw another order block from that 5 minutes. Something like that. Then you can enter from here. So instead of selling there, now you're selling here, right? Am I clear on this one?
Yep.
Yeah. So now, after you have this mitigation here on 1 hour, we go on 5 minutes, right?
Mm.
Now, on 5 minutes, this is where you would have entered. So that's the mitigation you had on 1 hour, right? So price, if you can just even start from here, price was in that uptrend, right? That was your low. Then it went there, then it broke your low there, right?
Mm.
So after it broke your low, now from this swing, you draw your order block, and that is your order block. That is where you would have entered. Because this is where your change of character is on 5 minutes. Now the price is showing that price is going to reverse. So this is where you would have entered. Is that clear?
Mm-hmm.
Nadia, are you following? Has this guy disappeared on us or what?
Yeah, I think so.
Yeah, anyway,
His mic is on mute.
okay, he's going to find us in the middle. Yeah, so this is where you would have entered from this 5 minutes order block, right? Quite all right.
Mm-hmm.
You would have missed the entry here, but you have this opportunity to enter here.
Mm-hmm.
You see, so from there now you just hold your trade until you see where you know that okay, now price is going to reverse, or you see some kind of reasons, right? So this is the first method I was talking about, right? Of where you use multi-time frame, right?
Yes.
Yeah. Now let's talk about the second method. The second method, this is how it works. You just choose one time frame. If it's
Yeah.
15 minutes, 5 minutes time frame, you just stick to 5 minutes time frame, right? So this is where you have to be good with making your high highs, high low, high low, right? So because if price is moving like this, if price is moving like that, So basically this is how market moves. Goes in an uptrend, downtrend, uptrend, like that, right? So with this one now, with this one, where you're just following, you're following the order flow. So how does this work? How does this work? Say if you find the market like, okay, now it's making those break of structure to the upward, right?
Upside.
Yeah. So it's making those, let me just label these ones. Like this, right? So the market was in an uptrend, making break of structure, break of structure, break of structure, break of structure. Then here it takes out this lowest point in this uptrend, takes out that lowest point, creates a change of character here, then starts making break of structure to the downside, break of structure to the downside, again changes character, indicating the price is going back up, then creates more break of structure to the upside, right? So this is how the market behaves. So here we don't need to go in 1 year, we don't need to go in whatever higher time frame. We just need to follow the order flow. So when you see market, you find market making this break of structure to the upside, right? We know that, okay, now market is in an uptrend. So every time market makes a break of structure to the upward, right? What you do is you mark the order block or the demand that caused this break of structure, and you wait for market to come to that order block, and then you buy from there, right? And then you buy from that, you buy from this, right? So there are two ways. How do you know your TP with this one? So there are two ways you can do this. You can either scalp the market. Every time it creates a new break of structure, you close your trade, right? You close your trade, you mark another, you mark another demand or order block that caused this new break of structure, right? So if I just lock this, yeah. So you mark another order block that caused this break of structure here. Now, there are times when it does not even come here again, and then it creates a new break of structure. If it doesn't come to your order block, the one you marked here, but it just comes near it, but when goes on to create a new break of structure, what you do is you mark another order block or is a demand that caused that other break of structure. If price decides to come and mitigate this order block here, you do the same thing. You buy here again, and when it goes to cause a new break of structure, you close your buys, just like that. Same again here. So you're going to find a time where you do this. You're waiting for price to come to your order block so that you can buy, right? So that you can buy, and then you're targeting that break of structure, right? So market comes here, you buy here. After you buy here, then it breaks then it clicks your stop loss, right? So after it hammers your stop loss here, you lose this trade. Quite all right, losing is part of the game. After you lose this, then it creates, it also breaks this low here, right? Then it also creates a change of character. So right here, the market has been flipped. Ne? So now you know that, okay, now we have a flip here. This demand didn't hold. It created a new lower low. Now you mark a fresh supply, indicating that price now is going to start going down. And then you sell from there when price goes to that zone, you target your break of structure. So now, before we continue with this one here, let's go back to that one. So if you are not a scalper and you're a swing trader, or not just a swing trader, but if you would like to hold your trades longer, you would still be in this trade until you get that change of character. So you will still be holding this trade here. You would have just added more trades. You just keep adding more trades as long as it's going to that direction until the moment you get a change of character. Then you know that, oh, price now is going to reverse. That is when you close your trades. So that's another way to know that, okay, now it's about time I close my trades. So you close your trades, you close your trades immediately. Or what you can also do, you can even close half of your trades and put the remaining ones on break even. But then the ones that you're holding, you make them target your new here, your new supply here, because you know that even if market has made the change of character, it still needs to go back to cause that, to go and mitigate that new supply there. So that is where you would finally close your trades. Am I clear or am I too fast?
No, you are clear, because I think that is how I've been trading, following the order flow. Yeah.
Just following the order flow.
Yeah, that one is easy for me. It's softer, and I don't get inspired to spend a lot of time on the screen waiting for, let's say, 4 hour, 1 hour.
4 hour, yeah. Things. Exactly. Things like that. So when it goes into a downtrend, you do the same opposite you are doing here. You mark your extreme supplies. You just mark your extreme supplies and you sell from there until you get the one that's going to hit your stop loss and cause you a change of character. Quite right. You've been winning here, winning here. Don't feel bad for losing this once here. So losing is part of the game. So until you get that one where supply now fails, after it fails, changes, it causes a change of character, then again you continue again, you mark your new demand. You have a flip here, you mark your new demand, you continue again, same thing, same story. Same story, just like that. So here you just keep on selling there, sell there again, you sell there again, it fails, and hits your stop loss. But you as a trader, you don't give up. You already know what you're getting yourself into. You knew that losses will be part of the game. You like that. Sometimes this one does not even get mitigated. It leaves you. You wait for the next one, like that. So you don't care where the market is going. You're just going with the order flow. You're just going the order flow. So now let's look at some of the examples how would have gone with this market, right? So if you can start from here, right? If you can start from here. So market is going up, then you have this this sudden move to the downwards, right? So now where is that? Where is that? Oh, it's here. So you have your change of character there. It was just taken out by that. So just taken out by that week there. Then you know that it has. If you want, you can if even if this didn't take it out, you can still assume and take it all the way there, right? Just make it more clear that okay, market is changing direction, right? So you have your first change of character there, right? Because these are break of structures here. Those are break of structures there, right? So now you mark your order block, right? So before you do that, let's just do this. Let's just mark it the way it is here, because this was already taken out here. So I'm going to leave this one here. That is where the change of character happened. So now from there, you, after market took out that one, so expect it to go up there before doing anything, right? So now we mark our order blocks. So we mark that as our order block. So we were waiting for price to come here just so we can sell from here there, right? Now price, as it tried to go there, it failed and then went back down again to cause a break of structure, right? Break of structure happened there. I don't know if you can see. Let me just zoom out just so you can see nicely. You see there?
Yeah.
Change of character happened. It was wicked out there to indicate change of character. Then again, break of structure happened there, right? Now, as we can do this. So after we have a break of structure, we have a new zone where we can
Point of
trade from, right? So we mark that one as our extreme order block. So it only got indicated there. So even if check now what happens there. Check now what happens there. Also here, it went on to create another break of structure, right? Now, when you look at how price was behaving here, right? You would understand that just selling from here, normally this would be another supply, because this supply here caused this break of structure to the downwards, right? Normally would sell here, but because of how price was behaving, it wasn't that clean. It was creating liquidity, plus this was in the Asian session. So this, when talk about liquidity, this would look like a trend line liquidity. So where we have trend line liquidity, we don't want to sell from here. We know that it will not hold. This is why price, you can even see it did not respect this supply here, but it went for that one, right?
Okay.
Yeah. So now if you sell here, your stop loss is there, and then this is where your TP would be. Your last, you are aiming for, that's your lowest point, right? That's where your TP should be. Yeah, just aiming for that lowest tip. You want, because the next break of structure will be this one, because this is your lowest point, right? So that's the next break of structure is supposed. So that would be where your target should also be if you're selling from there, right? So now what happened from there? Your TP gets hit, creates a new break of structure, right? So after it creates a new break of structure, you mark your zone or your supply that caused this break of structure, of which that is the supply there. You mark it there, and then look what happened after it caused break of structure here. Then price went there. Now, if you sell there again also, price hits your stop loss, right? So after price hits your stop loss, you won here, you've lost there, right? Which is which is okay, but it's part of the game, right? So after you've lost there, now you look at price. Price made a change of character because that was your highest point in this mini downtrend. So there you have your change of character to tell you that price is changing direction, right? So from there onwards, you know that now I need to start selling. So now you come here, you draw your order block. So here you can draw your order block because that's the last bearish candle. Before that, order block. Now you have this. You have this as your order block. Now you refine it to that one there. You refine it to this one here. I'm sure you learned about refinements, right?
No. But why do you refine it?
You see, we are refining it so that we can get that say a better entry, because normally this, you see, and more like an order block always pushes that that movement, that sharp movement to the upward, right?
Okay.
Yeah. So the normal order block was this one. The normal order block was that one. Now this order block, it did not create automatically that move to the upwards, right? Price only started moving. You see these candles. These candles only came in after this one here.
That other one.
Yeah.
Okay.
So after you refine your order block, after you refine your order block, you want to buy from here. You want to buy from there. Your target is just that one because that's your highest point, right? That's the highest point. You don't want to hold it all the way there or close it fast and things like that, right? You want to close it at a reasonable area, and you know that this high needs to be taken out, right? So that's why your target should be. So price caused change of character. I mean, break of structure. The change of character was already there. We have the break of structure to indicate that price is still going up, right? So with this one now, with this one, you have this. This would be your normal supply. You can trade from there. You can also trade from that one there,
Okay.
right?
Okay.
Because now this one we had a lot of areas where you could have traded from. Let's see, we have it was a noise. It was a noise thing to like trade from. You didn't know which one is going to trade. So for me, when I see something like this, I don't like trading. I don't like adding trades in areas like where they have multiple order blocks. All these are valid order blocks.
Mm-hmm.
Now, I'd only want to add trades to the extreme one here, not that one there, not that one here, right? I would want it to go to the extreme one. And then after price broke there, price price went on, and then caused another break of structure. Cause another break of structure. You see, this one here, because it was just a week out, with a break of structure, we need to see at least even a candle close, right? This is why we're just considering this as one movement. This as just one movement.
Mm.
Yeah, because when you only got a candle close above that high around that point. So that's all. This we only consider these week outs when it comes to change of characters. But when it comes to order break of structure, you want to see the whole candle closing above your high or above below your low. So we have the second break of structure there. After we had the second break of structure, after the second break of structure, right?
Mm-hmm.
And then we have that. You see this is clean. There's only one candle in there.
Yeah.
This I would definitely add trades there.
Mm.
I would definitely add trades and I'll just aim there.
Yeah.
Just after we get that break of structure. You see?
Mm-hmm.
I would aim there. Then price makes another break of structure here. Another break of structure. So now this was towards the 1530 where price spike a lot and things like that, right? But you just have to trade the same way. Now you have to remember that you have this one with this order block here, which wasn't mitigated.
Mitigated, yeah.
Yeah, so this is still valid. All those that haven't been mitigated, they are valid. You have that one that wasn't mitigated, and also as it was going up, you also had this one, this one.
Mm-hmm.
So look at what price does now. So from here, we didn't draw this, we didn't draw that one there. Let me show you. Let me just do this. We're not going to draw this one because it is that huge, but we are going to refine it. You see, when you have a huge order block like that, and you have these candles, bullish candles that go on to break it without any other candle here. That means you can consider this as your order block, that one there, as your order block, right? I think when you go to the photon course, look at where he talks about engulfing order blocks.
Yes.
You remember the engulfing order blocks, right?
Yes, I picked that up.
Yeah. So This is also called the refinement. The normal order block is this one. We're just trying to refine so that our stop loss shouldn't be huge like that. You see, if we enter there, that means our stop loss is down here. We don't want our stop loss to be huge. So we have to refine it to this order block. So this is called an engulfing order block, right? So look at how price just came there.
And then went up.
Came here, you would have bought there. So when you buy here, when you buy there, stop loss. Stop loss is stop loss. So now this is 1530. Now 1530. With 1530, you can either aim here. You can either aim here your highest point where it came from, or when price comes there, you just put your what? You just put your stop loss at break even, right? And target you already know that I have another order block that hasn't been mitigated here. So there's a high chance it can spike there because we always get those big movements during 1530. So you target that one there. You'd have targeted that one. You would have bought there, targeted that one there, and then you would have sold here. Just hold on. You would have sold there. So after I sell here, price mitigated there, then it came all the way up to here. So immediate price, you already know immediate price goes into profit. Always move your profit, your thing into break structure. I mean, break even. Your stop loss into break even. Move your stop loss into break even. So this one would have taken you out. Then look at what happens. This one can just, okay, let me just do this. Let me not remove it. Let me just do this just to show that we lost this trade. So you've been winning here. You won that one there. You've just been winning. You lost that one even at break even, or even if it hits stop loss, it's still fine, but you've been winning, right? So now, even if we did not know about this 1 hour order block, right? We don't know about this one. We are just following market structure, right? This was our previous low. It wasn't taken out. This wasn't taken out. That one there. That was our previous low. It wasn't taken out. It created a new previous low here. It wasn't taken out. Price then went all the way up there. And then it reversed. It reversed. So if you still remember this order block, you would have bought here, right?
Yeah.
If now you have to know that you have to be very fast. You have to know that, okay, fine, quite all right. I am buying here. You have to know what price is doing. It's reacting to this order block of where you are, of which you're buying here. Of which you're buying here. Of which you're buying here, but you also have to know your target by knowing what price is doing just by following the order flow. So you see here that it changed the character because your lowest point was taken out. So here, remember when we marked this order block there. So you knew that market is going to come to this and make a reaction, go back from here, right? So if you buy here, just target the beginning of that order block. Even if you get a 2-to-1, it's still fine.
Okay.
You just don't be greedy and say, okay, maybe now price is going back up. No, understand what's happening in the order flow. It's just created a change of character here, meaning the down movement has started and it's just going to this huge order block, this one here. So with a huge order block like this one there, you just use a small lot size, because obviously, if I can just minimize that and also minimize that one there. Yeah, at least now this is visible. So now you know that, okay, now you have to reduce your small lot size, right?
Yeah.
You have to make it small, because now you know that you are selling from this order block, unless maybe if you go on 1 minute to refine it, some kind of that. So you know that, okay, now I'm selling here, and you can now go with the flow. Since you're using, if you're using even a small lot sizes, you won't even be in a hurry to close the trade, because it's a small lot size, even if it's a 0.01. So you just hold this trade, you can just hold it until you get a change of character indicating that price is going to reverse. You keep holding this trade, right? So look at what happens here. So now this trade, I'm just going to keep holding it, but let me just minimize to there. We study this movement, right? So look at what happens now from here. After price created a change of character, it went up to mitigate that zone. Then that was the lowest point, made a break of structure, right? When we created this break of structure, it created this new area or new supply to trade from, of which price came down. It only went close, but it did not mitigate. That means we did not trade from this zone, right? Because it's not going to our zone. So we don't trade from there. We delete it. We wait for we wait again. It creates a new break of structure here. New break of structure. That means new supply is on the right. Same again. Same again. You place your limits there. Nothing happens. Price just fell down. But all this time you are still in this trade. Here we're just trying to add more trades. It didn't come here, we didn't add. It didn't come here, we didn't add. It went all the way there. It went up, thinking that, okay, now it's coming to us zone so that we can add trades. Then it does that. We have a new break of structure. We have a new break of structure. And new supply, right? This is where now we add more trades, at least with a little bit bigger stop loss compared to this one here, because you can see that your risk here is not as big as your risk here, right? So here, you can increase your lot size. You increase your lot size. You also keep holding it. So market, what did market do here? You are just going with the order flow, right? Creates break of structure here, right? We have that break of structure. That means new supply, price came down, went the break of structure, there, break of structure, delete that one, a new supply is here. A new supply is there. What do? You add more trades again, right? You add more trades there. Stop loss just above your zone, right? What did market do? Comes down and then goes out to take you out. So you lost this trade. And then you got a change of character. You get a change of character, right? So you got a change of character here. You got a change of character here. So you know that the price is still going to reverse, right? So you draw your you draw your new supply zone that caused that break of structure. You draw your new supply zone. You see what happens. So immediately price comes here, ne? To this supply zone. You are buying. You're buying with stop loss just below there, your zone. At the same time, now you're closing this trade. You're closing that trade there at the area where you're buying. You're closing out that trade, and now you're closing out this trade you've been holding all this time. So this is the area you're closing all your trades. That's the area you're closing that trade and that trade, right? Your two trades, you just close that one, you lost this one, you are in profits with the other trade. You see?
Yeah.
Just
No,
by
I'm
following, order flow. See, we didn't know about this zone because we're not checking higher time frames, but we reacted to it after we got a change of character here and we entered into that zone and we got this movement. Even if we missed that entry, we missed that entry there, but we still made profits. So just by following order flow.
Order flow, yeah.
Yeah. So now let's try to use the same methods to binaries, right?
Okay. 5 minutes break.
Sorry?
Can we take a 5-minute break?
Yeah.
Okay.
Okay.
Yeah, just want to go to the bathroom and get
Okay.
something.
No problem.
Okay.
Okay.
Okay, thank you.
Okay. Should I pause the thing or?
Yeah, you can pause and just WhatsApp me when you are back.
Okay, no, you are the one who's going for a break. You just tell me when you're ready, then we can continue again.
Okay, I'll be there. I'll be back shortly.
Okay, just let me know. Then you can create. I'll send you a new link then.
Oh, are you okay? No problem.
Oh, let me just say, let me just pause this one.
Yeah, you can pause it. I won't take long. Maybe
okay,
just 3
yeah.
minutes.
Oh, yeah. No problem. You find me.
Okay.